Alright, good afternoon everyone. Today is Monday, December 3rd. Can you believe it? December 3rd already. 2012. Alright, the results for the live trading room this morning. Soybeans were +6, the Russell were +5, the gold were +7, crude oil +24, and the NQ, we are -2 ticks on the NQ. Alright, that's how we ended the morning session. I'll go over them again for you. Let's start down there at the bottom. Soybeans +6, Russell +5, gold +7, crude oil +24, and the NQ -2. Okay. If you have not taken a free trial with us, go to www.cfrn.net/apply. Sign up for the free trial. If you sign up for the free trial, you'll get 5 days in our live trading room. You'll get access to everything you see here. Actually, you get access to Dwayne and myself. You get access to all of the indicators and the charting platform. If you bother to go out there to cfrn.net/apply and sign up for the free trial, all we ask for is your name and your email. Go through the rest of the process. Get signed up for the webinar as well, so you can get into the live trading room. If you just go through the steps to sign up for the free trial and you don't go all the way through to sign up for the live trading room, then you're not going to get access to the live trading room. You'll miss out on the free trial. You'll have access to a set of indicators you don't know how to use. So I would highly suggest to everyone, if you're going to bother signing up for the free trial, go all the way through, sign up for the live trading room as well. Okay. There's a couple of steps. You click a couple of times. There'll be emails sent to you just to verify, because we want to make sure that you understand we don't spam anyone. Look in your email. There'll be twice you have to look in your email. Once for a subscription sort of thing. You click on the link, and that takes you to one last step where we can send you the link to get into the live trading room. Okay, then you click on the link to the live trading room, put in your name, and you're good to go. All right, that's it. I just wanted to go through that because Dwayne and I went through a lot of trouble this weekend to try to get everybody that had signed up kind of halfway alert to the fact that they had signed up kind of halfway. Now, moving on to the trades. Let's start with soybeans, since I have the soybeans up right here. I only took one trade on the soybeans this morning. It was a short trade. There were two possible ways to take the trade that I took. Right here we had a pullback up to the BBC and test to the BBC with some bearish divergence. When I say bearish divergence, I mean the green line is moving away from the cycle. All right. Now this is a 4-tick range soybean chart. All the 4-tick range trades are going to be the same. Everything that I show you in here on the 4-tick range charts is going to be the same setup, the same set of indicators. Okay. Think about that for a minute. Every single market that I'm going to look at, and I'm probably going to look at 4 or 5 of them in here, they're all using the same set of indicators and the same setup. Okay. Every 4-tick range chart. So they're all the same time frame, same setup, same set of indicators. We're looking for a pullback up to the BBC, expecting a bounce off of the resistance that was given by the BBC. When you pull back to the BBC like this, if you have bearish divergence, you only need a down close off of the BBC. All right. If you don't have the bearish divergence down here, then a close below the trend line would work. Okay. If the market's going to continue the trend, a close below that trend line or a break of the pullback trend, a break of the short-term trend would work, okay, to continue in the longer-term trend. That's what that is. When it pulled back up here, it hit the BBC and it gave the down close. I tried to enter right here at 14.55 half. I did not get filled, so I waited until we got the close down here. Once we got the close down here, I did enter that trade. And when I entered, I was looking for, is this 50? Yeah, 53 1/4. I was looking for 53 1/4. By the time I realized what I was looking for, it had already gone through it, so I just got out of the trade with +6 ticks. All right. Since then, I haven't taken any more trades. There was a pullback right here, a down close right here. This only went, what did that go? 3/4 of a point from entry to the swing low. Okay. Now, what you would have been anticipating was the swing low. At that point, you would have taken your risk off the trade, maybe gotten break even, maybe made a tick, whatever the case. All right, over here we had a bullish cross, pull back down, test to the BBC. We didn't have the divergence to support the trade, so what would you look for? You would look for the close above the trend line. right there. All right, that made a nice move up. Okay, that's it. That was all I did on soybeans this morning. I said I was going to spend time on gold, not on the beans. But I took, on the NQ, I took a couple of trades this morning on the NQ. I lost the first one, and here it was right here. All right, I went short over here on the close down below the trend, line. The better trade would have been over here. Okay, if I'd have gotten in over here, obviously in hindsight you can see that, but the close below the trend line over here would have been the better trade. We had bearish divergence to support the trade, but as it pulled back over here, we lost our divergence by the time we had a down close. The cycle was heading up, so you couldn't short right there. You had to wait for a close down below the trend line. We didn't get one there. We did get one over here. I did short it there, and I did get stopped out right there. Okay. Then I let the market go for a little while. I didn't take any trades in here. There were some other trades that set up. You can see them. I've outlined them. I've drawn the trend lines and all that. I did finally take another one over here. The better entry on the trade would have been right here, but I missed that, so I got in on the close down below the trend line. Now, when I say the better trade would have been right here, I mean the down close off the BBC, okay, because we had bearish divergence at the time. That would have been the better entry. But since I didn't get that, I just waited for the close down below the trend line. I did take that. I got a little bit of profit on it, not enough to make up the loss of the prior one. There was another trade right in here with opportunity. Now, the down close off the BBC, we had lost the divergence. The cycle's heading up, so you wouldn't be taking that. All right, you wait for the close below the trend line over here. Okay, that's the down close below the trend line. I did take this one over here, and I got, I don't know, 3 or 4 more ticks out of this one. Okay, the down close below the trend line was right here. I shorted there. I took profit right over here. That was the NQ for me this morning. Okay, I didn't trade it a ton. I traded it just a little bit. I lost that first trade, and I took two trades to make back most of it. Unfortunately, I didn't get it all back. Now, this is the ES 4-tick range. I didn't trade the ES at all this morning. I'll point out where Dwayne had taken the charts for me this morning for a little bit, and I'll point out where Dwayne had suggested taking a short in just a moment here. Again, you have your bearish cross, your pullback to the BBC, but there was no way to enter this trade. You didn't have any divergence, so you get the close down below the trend line. Right in here, again, 4-tick range, same set of indicators, same trade setup. Okay, down it goes. Again, down it goes. On this one over here, had a bullish cross, tested the BBC, up close, right here, up it goes. It didn't go very far though, it only went about 1.5 points. Over here, same thing on the downside. Again, over here on the downside. Then it retraced, and right in here, if you shorted right in here, you would have gotten stopped out on that one, and you'd be over here right now looking for a possible long entry. All right, I was not real eager to trade the ES this morning. As a matter of fact, I wasn't really eager to trade any of the indexes this morning, the stock indexes, because the ES was in and around a weekly trading zone all morning. All right. When Dwayne had the charts this morning, he pointed out one trade that came through. He did it on a 2100 tick chart, but I'll just point it out here on the ES 10,000 contract. Right in here on the pullback to the BBC, on the 2100 tick, Dwayne had suggested shorting 14.14 and a quarter. MIT, which would have put you in at 14.14 even, it dropped 2 points down to 14.12. Okay, that is what we would have been anticipating for a profit target, minimum. Or that's what we would have been anticipating for a profit target. I don't mean minimum. All right, since then it's pulled back up, it's now tested the YBR inside the weekly trading zone. Again, I was saying this morning in the live trading room quite frequently, I didn't like trading the indexes because the ES was all around a weekly trading zone. Okay, let me jump over to crude oil. I did take a bunch of crude trades this morning. I don't remember if I lost any, but I do know that I won some. Yes, I did lose one. Okay. I missed a bunch of them in here, but right in here where it tried to pull back down to the BBC with the bullish divergence, it didn't actually hit the BBC, so I waited for the close above. I took the long trade right there, took some profit up here. Okay. There was opportunity here on the downside in a number of different ways, but right there, right over there. So in here you could have shorted right in there. You could have shorted right in here, but I missed all of that. All right, and and then it moved up, and I took a long trade over here on the up close above this trend line. I went long. I stopped out right here. I stopped out down here, and then we had bullish divergence and it tested the BBC with an up close. So I took the long right here, and I got all my loss that I made on this one right here. I got it back over here. So over here, I think I had profited 5 ticks. Over here, I had lost 8, and over here, I had made back 8 because I was plus 3, I think, at that point right there. There were a bunch of opportunities to trade in here. I missed them all. Okay. But you can see I had drawn in some trend lines and some ellipses and lots of places in here where you could trade. I did take a trade over here. I don't know if that was my last trade on. Yeah, it was. I did take a trade over here on the crude, and it really tanked in here. 89.22. It dropped way down there. I think there must have been another trade that I took in there somewhere too. But anyway, I did take a trade in here, and I took the short on the close down below the trend line. Okay. And I don't know if I took this one too. I might have taken this one too. But the same thing happened over here. You didn't have any divergence down here on the slingshot when it pulled back up and tested the BBC and gave the down close. So you're not going to short on the down close. You're going to short on the close below the trend line. Okay? Right there for that little move down. Over here on the way up, there was no divergence here. Okay, for the long trade. So the buy was right here on the up close. Okay, over here now you have some divergence, but the cycle is red and headed down. So the conservative way is to wait for the up close. Okay, doesn't look like we got the up close above that trend line. All right, and that took us into the break. That was on the gold. All right, I'll show you the Russell. I think I only took one trade on the Russell. Yeah. The Russell had some nice opportunities in here as well. This one I did go over in the live trading room. Right here, this closed down below the trend line. After this moved down, the close down below the trend line gave you about 4 or 5 ticks profit. Then it pulled back up here, tested the BBC, and gave a down close with some bearish divergence right there. Okay, if you got it there, great. If not, it closed below the trend line on the next bar, so you could have gotten in right there for that move down. All right. There was plenty of opportunity right there on the Russell. I know we had some of our partners, they were done for the day on that one right there. Now let's see, scrolling over right here, you had the trend line and the bullish divergence. Could have gotten long right there or right there on that, going right up to the weekly trading zone. Over here, I did get short over here. Pull back up, tested the BBC, and the down close with the bearish divergence. I got short right in here. I could have waited for the close down below the trend line, which would have been right here. Would have been 1 tick better entry. Anyway, I took 5 ticks profit as it moved down right over here. Okay, that was pretty much it on the Russell. There was some opportunity over here on the Euro, so let me show you that. Okay, we had pointed out over here, the up close over here was the spot to get long on the Euro. Okay, over here we never had the up close, so nothing there. But there was some opportunity over there on the Euro this morning as well. Now gold. I had pointed out on gold, I'm going to blow this up. And I don't want to spend a lot of time on it because I do want this to be able to convert properly so I can put it on the website. What we look for here is, a bearish cross of the MA1 down below the BBC. The MA1 is the blue and red line right here, and the BBC is the green line. We look to have divergence on the slingshot whenever we take a bounce off the BBC and a down close. You get a bearish cross, test of the BBC, and a down close. If you have bearish divergence down here, you can take that trade right there. If you don't have the divergence, or if you don't actually hit the BBC and the trade just continues with momentum, then you got to look for the trend. All right. Now the way that the market moves, it moves down and up and down and up and down and up. And the down legs in a down trend are going to be longer than the up legs in a down trend. Okay. So where we want to buy it in that pattern is right in here. You get your down leg to establish a trend. You get your short up leg, which is a pullback. Up here it's looking for some area of resistance, which is our BBC. It hits the BBC and it starts to go back in the direction of the trend, the longer leg. So you jump in at the top of that longer leg, anticipating a longer move down. Okay? That's what we do. We do it over and over and over and over and over and over and over again. And we do it on all the different markets using the same set of tools. Okay, that's what we do. So right in here, the opportunity to jump in on this leg down was right here. Okay, there was an opportunity right in here, which would have been up at the top, to jump in on this leg down. Okay, this one moved back up. So when it moves back up again, you're looking for your opportunity to jump in on the downside again, which would have been right here, this down close right here. Now these are a couple of trades that I took this morning. I don't know where this arrow came from, but I think it goes right in there. All right, I took the down close below the trend line over here because I missed this one. I took the one down below the trend line. I got some profit there. Came back up, tested that again, and moved down again. I took some more profit on that. All right. Now, eventually, those legs are going to change, and the leg up is going to be longer than the leg down. That's when the trend starts to change. And in the live trading room, we alert you to these things. That's why you're in the live trading room, so that we can help you out seeing these patterns and when the market starts to change direction. Okay. Now that's all using our indicator set. We do it based on our BBC, our MA1, where the weekly trading zones are, what the slingshot's telling us, and we can use price action. We can and do use price action quite often to determine the range of the trade, things like that. All right. That's it. That's what we do. Again, if you guys have not taken a free trial with us, go to www.cfrn.net/apply. Sign up for the free trial. I'll go over the results again one more time since a lot more people came in here since the start. Let's start with the soybeans. The soybeans, we were +6. Crude oil, Russell, we were +5. Gold +7. Crude +24. And the NQ, we were -2 ticks. Okay, that was our morning. www.cfrn.net/apply. If you go that far and put your name and not your name and password, but your name and email address in there, when you get the other emails in there, just click on the links that are in the email so that you can get into the live trading room. Okay.